Gentlemen, thank you for standing by and welcome to the Aurora Mobile second quarter 2021 earnings conference call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. If you require any further assistance, please press star 0. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your host today, Mr. Rene Van Gisteen. Thank you. Please go ahead, sir.
Thank you, Rohit. Hello, everyone, and thank you for joining us today. Aurora's earnings release was distributed earlier today and is available on the IR website at ir.jiguang.cn. On the call today are Mr. Weidong Luo, Chairman and Chief Executive Officer, Mr. Fei Chen, President, and Mr. Shan-Nen Bong, Chief Financial Officer. Following their prepared remarks, all three will be available to answer your questions during the Q&A session that will follow. Before we begin, I'd like to remind you that this conference call contains forward-looking statements within the meaning of Section 21E of the Securities Exchange Act of 1934, as amended and as defined in the U.S. Private Securities Litigation Reform Act of 1995. These forward-looking statements are based upon management's current expectations and current market and operating conditions, which are difficult to predict and may cause the company's actual results, performance, or achievements to differ materially from those in the forward-looking statements. Further information regarding these and other risks, uncertainties, and/or factors are included in the company's filings with the U.S. Securities and Exchange Commission. The company does not undertake any obligation to update any forward-looking statement as a result of new information, future events, or otherwise, except as required under applicable law. With that, I'd now like to turn the conference over to Mr. Luo. Please go ahead.
Thanks, Rene. Good morning and good evening to everyone on the call. Welcome to Aurora Mobile's second quarter 2021 earnings call. This is the second quarter where we have been operating under the pure SaaS business model since the beginning of 2021. We delivered strong results, and I am pleased to kick off this call now to share with you our business progress and key business metrics achieved in the second quarter of 2021. Before I comment on our Q2 results, I would like to remind everyone that the quarterly earnings deck is available on our IR website for your reference. You may refer to the deck as we proceed with the call today. Let's begin our review with highlights of our key operating and financial performance for the second quarter of 2021. As a reminder, we completely exited target marketing at the end of 2020, and our business is now 100% focused on the SaaS business, which include developer service and vertical applications. For apples-to-apples comparison, numbers presented exclude contribution from the legacy target marketing in the prior year. In the second quarter, we continue to apply our company-wide focus and concerted efforts to grow our SaaS business, and it has paid off. Here is a summary of the strong results for Q2 2021. The number of paying customers increased to 2,634 from 2,281 a year ago, up 15% year over year. Revenue was RMB 89 million, up 34% year over year. Group gross margin was 75.7%, which is more than 1.8 times compared with 41% from a year ago. Gross profit was RMB 67.4 million, up 33% year over year, and adjusted EBITDA was negative RMB 13.3 million, a substantial improvement of 27% from a year ago, demonstrating our strong operating leverage. Revenues from our SaaS business continued their strong growth momentum this quarter, mainly due to the 34% growth in both the developer services and vertical applications. The successful transition into the pure SaaS business model since the beginning of 2021 has helped us to deliver 2 consecutive quarters with gross margin above 75%, a significant improvement from 41% a year ago. The strong gross profit growth of our SaaS business was mainly driven by revenue growth of 44% year-over-year. Here, I would like to take a moment to give an update on our latest product, JG Unification Messaging System, JG UMS, and JG Video as a Service, which is JG VAS. We continue to see strong market demand for our new products, namely JG UMS and JG VAS, since their respective launches. The total signed contract value for UMS and VAS has crossed over 3 million. The current and potential customers for these products come from a wide and diversified number of industries, including finance, medical and healthcare, media, short video content provider, social networks, e-commerce platforms, and more. For example, we recently partnered with Yoyo Poultry, an online consumer events and delivery platform. They start implementing our AI-powered JG UMS to help optimize their smart operations and drive intelligent solutions to expand user reach. Through this partnership, Yoyo Poultry was able to replace manual operations, such as sending messages on different platforms via different channels. With JG UMS integrated messaging platform to reduce costs and increase operational efficiency with flexible routing management. Going forward, we will continue to help our customers jointly build an extensive value chain of their existing services. When we provide better and more customized solutions, we are able to create deeper and closer connection with our customers. We recently have also launched a new public cloud version of UMS, which provides free basic UMS services for mobile developers. Mobile developers can use this free version as a quick access and meaningful trial of JG UMS integrated multi-channel messaging services upon registering for an account without additional cost. In turn, this will help us to convert these mobile developers into fee-paying VIP customers. For customers with higher requirements for multi-channel push notification and user management, they can upgrade to the VIP versions of JG UMS and enjoy unlimited channel management, higher API call frequency limits, and other exclusive VIP services. As we discussed before, we need to continue to push innovation in our R&D efforts in order to meet the evolving customer needs and new requirements, which in turn will continue to drive our business growth. Our motto is to continuously promote innovations throughout our R&D organizations, which remains at the top of our priority. I would like to take a few minutes to share with you the progress of some of our product innovations during the quarter as a result of our relentless efforts and focus to stay ahead of the game. Besides continuous iteration developed for UMS and VAS products, we recently introduced a smart push version for our JPush services, which added a new post-push analytical functionalities to the integrated platform. App developers are now equipped with multi-platform, multi-channel analysis of the push message cycle. For example, developers are given message delivery data, including total number of messages sent, total messages reached to end users, and click-through rates, with the ability to visualize the data from different levels. This statistics helps developers identify key issues more accurately and efficiently in real time. For push message delivery that fails, developers can also utilize all deteriorations analysis functions to detect the data from the full message delivery cycle, and from there, they can uncover the root cause of any undelivered messages. With the help of these post-push functionalities and the push strategy recommendations, This feature can help developers effectively increase the delivery rate and click-through rates of the push message by providing a much more accurate push strategy based on learning from the past results. We believe that this new functionality will help developers create more reliable, comprehensive, and intelligent toolkits. And these toolkits will in turn greatly assist developers in improving delivery rates of notifications and click-through rates of the push message. Now, I will turn the call to Fei, who will discuss the Q2 performance in greater detail.
Thank you, Chris. Let me start the discussion on different revenue streams within the SaaS businesses. In the second quarter 2021, revenues from developer services reached RMB 61.2 million, a robust 34% and a 17% growth on a year-over-year and a quarter-over-quarter basis, respectively. The year-over-year revenue growth was fueled by strong growth of 22% in subscription services and a 57% growth in value-added services. Subscription services revenue were RMB 37.5 million, an increase of 22% year-over-year, primarily driven by new customer acquisition. In addition, we continue cross-selling various non-push subscription products such as J-Verification, J-SMS, J-Analytics, etc., to our customers in effort to increase our subscription uptake via multiple product lines. This effort has delivered solid results as the revenue contribution of non-push notification products increased to 38% from 32% a year ago. And the non-push notification products achieved a higher ARPU of RMB 38.1 thousand, resulting in the overall ARPU for subscription services increasing by 5% to RMB 16.2 thousand, compared with RMB 15.5 thousand a year ago. New and renewed contracts of notable customers in the quarter include China Everbright Bank, Yuyu Paotui, So-Young International, Yonghui Soup Stores, and so on. In this quarter, value-added services within developer services, which include revenues from JG Alliance services and advertisement SaaS, once again delivered a set of impressive results where revenues grew by 57% year-over-year to RMB 23.6 million from RMB 15.1 million in second quarter 2020, and by 26% quarter-over-quarter from RMB 18.8 million in first quarter 2021. We continue to see very strong and solid demand for our JG Alliance products. On the supply side of the JG Alliance, during the quarter, we continue to apply our resources to sign up more mobile apps in order to grow this traffic pool. The total number of apps within our network exceeded 340 apps compared to 280 in the first quarter 2021, representing a 23% growth quarter-over-quarter. As a result of apps growth within this traffic pool, the DAU within our network has increased by 20% to 180 million from 150 million in first quarter 2021. On the demand side, we continue to see strong demand from mini program developers who contributed close to 40% of JG Alliance revenue. To further expand the market reach and shorten the go-to-market process, we have used ad agencies to help us cover a broader customer base, while our direct sales team focused on serving large KA customers. In second quarter, ad agencies contributed more than 50% of JG Alliance revenue stream, while the rest came from direct customers. Major customers of JG Alliance in the quarter consisted of repeat customers, the market leaders across many industry verticals. They include, but are not limited to Weibo, Meituan, Weixin, Alipay, Taobao, Du Xiaomai, TravelGo, etc. Now let's move on to the discussion of vertical applications. Vertical applications revenue, which include financial risk management, market intelligence, and iZone, grew by 34% year-over-year as demand continued to recover from the impact of the pandemic. with the majority of the revenue growth coming from the financial risk management business. In the financial risk management segment, revenues increased significantly by 42% year-over-year, with the help of the 55% growth in ARPU. This quarter, we recorded the highest quarterly revenues compared with the results since the beginning of COVID-19 in first quarter of 2020. We continue to see huge demand for this product from KA customers, such as the banks and the licensed financial institutions. New and renewed customers include Mashang Consumer Finance, Du Xiaoman Financial, and 360 Digitech. Revenues from our market intelligence product increased by single-digit year-over-year. The lack of meaningful growth was due to a few customers delaying customized projects with us due to recent macro environment. However, we continue to see strong renewal with many large corporate customers, including TravelGo, NetEase Media, iQIYI, and so on. And lastly, while the new product transition is still underway, our iZone business delivered solid results during the quarter with significant double-digit revenue growth. This was mainly due to the completion of a few large-scale one-time contracts. With that, I will now pass the call over to Shannon.
Okay, thanks, Wei. I'll go through some of the key expenses and balance sheet items. Onto the operating expenses. Total operating expenses increased by 7% year-over-year to renminbi 105.3 million. In particular, R&D expenses increased by 16% to renminbi 54.3 million, mainly due to the increase in staff costs as we continue to invest in our R&D department, higher bandwidth and cloud expenses to support the SaaS business expansion. Selling and marketing expenses increased by 1% to renminbi 27 million, mainly due to the increased customer visits and offline marketing promotion activities. G&A expenses decreased by 4% to renminbi 23.9 million, mainly due to year-over-year reduction of 1.2 million in bad debt provision, which was a result of our company-wide focus on strict financial control measures. Adjusted EBITDA, calculated as EBITDA excluding share-based compensation and change in fair value of foreign currency swap contract, improved 27% year-over-year to negative renminbi 13.3 million from negative renminbi 18.3 million in Q2 2020. And this was the best adjusted EBITDA performance since Q1 of 2020. For the second quarter of 2021, we delivered another set of solid financial results. For the year-over-year comparison, the key highlights for this quarter include our SaaS businesses revenue increased significantly by 34%. Group gross margin improved from 41% to 75.7%, a direct result of Q2 2021 gross margin being 100% contributed by high margin SaaS businesses. OPEX, however, increased by only 7%. As a result, our adjusted EBITDA improved by 27%, which continues to demonstrate the scalability of our business model. And this is the second quarter where we have delivered SaaS business only results, and we are very pleased with the results we have achieved. And we believe that the growth momentum from Q1 and Q2 2021 will continue to bring more sound results in the coming quarters. Onto the balance sheet. I'll start with two key, very important KPI that we closely monitor. Firstly, the AR turnover days decreased significantly from 59 days in Q2 2020 to 38 days this quarter. This was similar to the trend seen last quarter due to both the shift away from the legacy targeted marketing to focus on SaaS business and the company-wide focus on improving collection. Secondly, the total deferred revenue balance, which represents cash collected in advance from customer, for a fifth consecutive quarter has exceeded 100 million RMB at quarter end. As of June 30th, 2021, the balance was at 111.5 million. Next, total assets were at 642.7 million RMB as of June 30th, 2021. This includes cash and cash equivalent of 297.2 million. The reduction in cash balances over the quarters was mainly due to the redemption of the convertible notes of $35 million in April 2021. Accounts receivable of renminbi 38.1 million, prepayments of renminbi 8.4 million, fixed assets of renminbi 75.5 million, and long-term investment of 168 million. Total current liabilities were at renminbi 360.5 million as of June 30th, 2021, and this includes short-term loan of 150 million, accounts payable of 13.7 million, deferred revenue of 106.3 million, accrued liabilities of 90.6 million. And on to business outlook. Our new full year 2021 revenue guidance is now in the range of renminbi 342 million to renminbi 360 million, representing growth of 33% to 40% year-over-year compared with last year. And the guidance for our full year gross margin remains above 70%. The update is primarily due to the revised outlook for our JG Alliance business. The use of third-party agents for our developer service, value-added service business has caused a change in accounting method for our revenue from gross revenue to net revenue, net of any agent rebates under US GAAP. In addition, due to the recent macro environment uncertainties, some of our potential JG Alliance partner has temporarily delayed joining and integrating with our traffic supply network. However, the long-term outlook for the JG Alliance remain unchanged, and we are still expect it to be our main growth driver going forward. Please note that for meaningful comparison purposes, the prior year revenue numbers used to calculate the revenue growth percentage exclude revenue from targeted marketing business. The above outlook is based on the current market conditions and reflects the company's current and preliminary estimate of the market and operating conditions and customers' demand, which are all subject to change. And lastly, before I conclude, I'll give a quick update on the share repurchase plan. In the quarter ended June 30th, 2021, we did not repurchase any shares. As of June 30th, 2021, cumulatively, we have repurchased a total of 921,000 ADS since the start of our repurchase program. And this concludes management prepared remarks. We are happy to take any question now. Operator, please proceed.
As a reminder, ladies and gentlemen, it is star followed by the number 1 on your telephone keypad if you wish to ask a question. Once again, it is star 1 on your telephone keypad if you wish to ask a question. If you wish to cancel your request, you can press the pound or hash key. We have the first question. This is coming from the line of Jacob Silverman from Alliance Global. Please go ahead.
Hi, everyone. Thanks for taking my questions. Are there any additional details you can give us on why partners are delaying joining, and maybe when can we expect customers to stop delaying their decisions? Also, around the accounting methodology, for reported gross margin, will that have any impact on reported gross margin for JG Alliance?
Hey, Jacob. This is Fei. I will answer the first question, and Shannon will answer your second question. So, as you know, recent the macro regulatory environment has changed, right? And because of this, it has resulted a temporary delay in integration for some of our potential JG Alliance partners to join our traffic supply pool, because many of the app developers in the pipeline are now focusing on getting compliant for their own mobile apps in terms of the privacy issue, the data collection issue, which is required by the government to rectify these issues, right? So they will slow down the cooperation with the third-party partners, including us. So, however, once their compliance work is finished, they will renew the collaboration process. So that's why we say, the longer term, the outlook for this business will remain unchanged, and we still, expect the JG Alliance to be the growth driver for our business going forward, right? despite the revision, actually for this business, JG Alliance, we still expect this year, to have a growth close to 100%, which is already very high, which is a great achievement we are going to have. And Shannon will answer the second question.
Jacob, on the gross versus net accounting and the impact on the gross margin, yes, it will impact some of the margin downward adjustment, but it's not expecting to be major. But because if I look at the example that we used before, $100 versus 106 gross revenue, the impact is only 2%. So answer to your question is yes, there will be some deterioration in gross margin, but we do not expect it to be material.
Okay, and then the delays, they're mostly on customers' ends. Are there any delays on your ends for getting customers on JG Alliance?
No, there's no delay from our side. Yeah, there's all from the other side, from customer side. Yeah.
Okay, so it sounds like also. Yeah, go ahead.
No, I'm done.
Okay. So it sounds like your relationships with publishers are improving. After 618, should we expect that success to continue for maybe Singles Day, or given the recent regulatory environment, maybe your relationship with publishers will improve maybe more in the next year in 2022?
I think we are start to see the improvement starting from the the fourth quarter, right? Because the regulatory, the rectification for these apps, it's ongoing process. So some of the partners, they are close to the end of doing the. With the revised guidance, right? So actually, we are going to expect, a flattish quarter-over-quarter growth from for the third quarter. So actually, this is a normal, in a normal situation, if you look at our past year, right? In 2020, actually, we are seeing a flattish, seasonality from the third quarter to second quarter, right? So because of the slowdown, we are seeing the similar flattish trend. But if there's no slowdown, actually, we were expecting, a higher quarter-over-quarter growth, right? So, but that said, since once some of the supplier in the pipeline, they finish their work, their regulatory work, and they will start collaboration with us. So we do expect the traffic to continue to grow in the fourth quarter, and also we do expect the Singles Day, Double 11, will have a positive impact to this JG Alliance business from the demand side. So that's why our full year guidance actually already reflected the quarter-over-quarter growth from the fourth quarter to third quarter.
Okay, and then switching gears, how has video as a service and UMS been progressing in recent months, such as the pace of new signups?
Yeah, so for the VAS and the UMS, right? Basically these two products. When I look at the number, the contract signing progress, actually the recent data shows it's close to 4 million contract value has already been signed up, right? Which is actually last quarter when we were having the call, it was like 2 million. So actually already doubled. So we are continuing to make progress in these two products, and actually for the contracts we just signed up, actually those are with very famous, actually meaningful big customers such as China Merchant Security, right? So with these household name as our new customer, we can use this as a case study, to continue to push to the similar customers in the same industry, right? So we do expect these two business to continue to gain momentum in the following quarter before the year end.
And one last one for me. Maybe to further monetize video as a service, are you considering offering maybe any ad placements, ad sharing capabilities in combination with the subscription that you're already offering?
Yeah, actually, we thought about this, right? I think that's like the two very different business model. One, currently what we are offering is a pure SaaS model, right? We actually, it's a subscription fee. We charge a subscription fee, which is pretty much a pure margin, right? It's a software type of margin. But once we offer, like as a kind of like similar to JG Alliance business model, which will certainly we will need to pay the media fee, and also as well as actually we need to pay the bandwidth costs, right? So the margin will be dramatically lower than current JG Alliance business model. So for the time being, we actually opt not to choose this way of monetizing, and we wanna continue to focus on the subscription-based model first. Before once we have gained a massive a good size of this subscription model, then we can think about it later on. Chris, do you have anything to add to this?
Yeah. Also, this is actually two different directions. So first of all, we want to focusing on some vertical industry. For example, financial industries, the bank, and those apps they have huge budget to invest in this vast content, but they are not willing to add any advertisement within their apps. So so in this case, they are willing to pay in a SaaS business model. So but for some like Turkey, internet companies, those companies they monetize by the advertisement. So in that case, they will probably like to do the traffic revenue share model. But in the first case, in current stage, we wanna focus on the SaaS business model, and because the bank and the financial industry they have huge budgets, and we are very familiar to work with them in past push services.
All right, thanks so much, everyone.
Thank you. We have the next question. This is coming from Ryan Roberts from Mavis. Please go ahead.
Hi, good evening, management. Thanks for the update. I have a couple of questions, kind of from my side. I guess first one is really you talked a bit about the supply side from JG Alliance. I guess some of the apps are undergoing rectification, so on and so forth, and are kind of slowing down their integration with you guys. What about demand? What are you seeing there? It sounds like your current DAUs are about 180, which is a nice step up from last quarter, or from Q1 rather, and your target for the year end I thought was around 160. So it seems like you guys are doing well on DAUs, which would make me think that you have some pretty solid revenue generation capability. I just want to hear what's happening on the demand side of that first.
Hey Ryan, this is Fei. So actually, from the demand side, it's never an issue, right? Because there's always customers who want to acquire new users, more new users, and also in large internet companies, they wanna wake up their dormant existing older users, right? So our size of this business, for the time being, even with the expectation of the third quarter, fourth quarter revenue, it's going to be close to 100 million, right, revenue. So this is still relatively small versus compared to the huge market size of this, for the mobile advertising industry, right? So that's why, and also for our JG Alliance service, actually this is a completely new media format, which doesn't really compete directly with the existing service providers, right? So which serves to our advantage. So we see all these pent-up demand, and the bottleneck has always been and will be the supply side, right? So that's why we need to wait a little bit until the macro regulatory process has settled, then we can renew the growth.
Right. And then talk to me a little bit about the ad loads. I think that was one of the things, another little dial you could turn for monetization. What's the current ad load looking like on JG Alliance?
Yeah, so ad load is still about 50%, right? Exposure divided by the denominator is basically the DAU, right? So ad load hasn't really been our focus yet. We want to continue, to acquire as much traffic, as much DAU as possible before we do the fine tuning of the ad load. And certainly we are working on it. Okay, from the product perspective, we actually launched the SSP 2.0, which will offer the functionality that for per DAU we will be able to offer multiple exposures, right? And the product got launched in July, and has been in trial process with a few apps, and the result actually is pretty encouraging. For the same DAU, we are able to increase the ad load basically by 25%, right? So we also have already established a migration plan to migrate our existing apps in our network into this SSP 2.0. So we will start with the smaller DAUs first, and when they become stable and achieve the results that we wanted, then we'll move on to those apps with greater DAUs. So we expect such migration process to be ongoing and a continuous effort, and we hope to be able to finish majority of the migration before the end of fourth quarter. So this in addition to the organic traffic acquisition, DAU acquisition, this will help the total exposure, so we can leverage in the coming quarter. That's why we already built in the assumption for the traffic to continue to grow in the fourth quarter, because fourth quarter you will expect seasonal quarter-over-quarter growth of JG Alliance.
And kind of blue sky scenario, what's your ad load target in Q4?
I think maybe increase by 10%.
So you're going to increase from 50% to 55, or you mean 50% to 60%?
Yeah, 55 to 60%.
Oh.
Yeah,
To 60%.
Somewhere in that range. Yeah.
Okay, that's the target. Okay, understood. Okay, that's helpful. Thanks. And then maybe another question is, I think you were talking a bit about the kind of cross-selling and progress there. I'm wondering if you guys have any analysis kind of about on a customer cohort kind of basis for kind of your VAS business, because that's what we kind of expect to see deliver some explosive growth, as we've talked about in the past a lot. Subscription growth is nice, but VAS is really kind of where we think there's a lot more capability, more potential there. Do you have any data you can share yet in terms of how many, let's say the average revenue, kind of recurring revenue rate might be, or kind of the, kind of some of those typical SaaS metrics? I think that maybe some other companies that you're aware of are following. Can you share some of those updates or some of those data points if you have them?
Yeah, we do. Actually, we do have those matrix, right? The typical SaaS, kind of like a matrix. So we actually segment our subscription business, subscription-based customers into two buckets, right? One is the KA customers, which is the top 1,500 internet companies, based on the DAU, right? So for these customers, actually, when we look at the customer the retention, dollar-based actually NDR, okay, net dollar retention, okay,
yep.
and over the past several years, it's been in the range of 100% to 120%, which is very sticky, okay. And then for the second bucket, basically are those customers, who are more like SMB, or smaller type of customer. For these type of customers, as you know, in China every year, actually every day, the apps come and go, right? For the smaller ones, they tend to, by nature, they cannot survive after a certain period of a certain time of operation. So for these segment of customers, when we look at the NDR, actually they are in the range of around 70%. So this is a natural, it's very difficult, to kind of like increase the NDR for these type of customer, unless we don't want to deal with these customers, right? So that's sort of the current situation. Okay.
Understood. That's helpful to hear that the KAs are kind of 100, 120. I hear they're sticky. That's good. And then maybe kind of adjacent to that, you mentioned kind of a realignment of the sales process a little bit, having internal staff focus on KAs and having agents do everyone else. Where do you kind of draw that line with respect to kind of the WeChat mini programs? Is that going to be agents handling that business for you, or alternatively, are you going to continue to do that in-house? And is there a potential at some point where these, at least the advertising side of it, could kind of sell itself? I realize signing JG Alliance customers for supply is maybe a very labor-intensive thing, but eventually, ultimately, there must be kind of a target in sight where an advertising client can kind of purchase exposure themselves, right? Which would make a lot of this much more scalable.
Yeah. So actually, currently, from the revenue perspective, right, revenue split, already over 50% of our JG Alliance revenue actually are coming from the ad agencies. So most of these ad agencies, they will do the customer acquisition, basically the ad customer acquisition themselves, and then they will even, a lot of them, they will do the ad placement actually operation themselves as well. So actually, we only offer the platform for them to work on, right? So for this set of agencies, actually already it's very kind of like automatic, and it doesn't really require our internal the labor or whatever resource, right? So going forward, we expected these ad agency, kind of like the revenue pie will continue to grow, because our direct sales force, their main mission is to serve a few, very large customers, such as Weibo, right? Such as, WeSing. These are very large customers, right? These customers, we need to deal with them directly because they have actually maybe, pretty more complicated request or demand or needs, right? But for majority of the customers, we will let the agencies to do it. So the scalability is not an issue, in our opinion. We never budget. We will build a very massive ad operation team and ad sales force. Okay, we don't need to do that. It's not in our strategy.
So could we potentially see some of the sales and marketing spend kind of come down a bit, or is that was that likely not in the cards?
Yeah. It's our goal to continue to generates leverage in the expense line items, right? So certainly the sales marketing needs to go down as a percentage of total revenue. I think for this JJ Alliance business, we think the leverage is pretty high, but it will continue to go up, okay? And what we need to do is actually work on to get the leverage for the subscription business. Subscription business actually per head revenue is still not in the ideal range yet, okay? So that's why we going forward, actually we are actually going to have actually already building sort of the K customer kind of like a sales team, which does not exist before. And these K customers, they will serve the industry, basically vertical by vertical, and serve companies like China Merchant Security, right? Such kind of customers.
Right.
They can generate 1 million revenue also, right? So this is where the sales efficiency will come from, right? By serving the large customers, right? And so this is an ongoing process. And not only on the sales marketing, also our R&D, we will continue to drive the efficiency. Okay, we will continue to optimize our resource utilization rate. We will continue, to reallocate the resource into the human resource into new product innovation. Okay, and also we will cut back the resource in originally devoted into the older products, right? Legacy product, push products, right? So that's sort of an ongoing process we are currently implementing. So I think going forward, yeah, we should continue to see operating leverage.
Okay, and a couple two last quick ones, very quick from me on kind of the numbers side of things. Just kind of curious, could you remind us what that other income line is on the P&L, and also for the prior share buybacks, what was the average buyback price? And then I'm done.
Okay, let me take a look. So the other income is mainly on the government grants that we get, the subsidies we get from the Shenzhen government.
Gotcha. Okay.
Right.
And roughly speaking, what was the prior buybacks? What were those prices per ADS? Roughly?
Oh yeah, I need to get back to you because we have not been repurchasing that for at least 4 quarters, so I don't have the numbers readily available. Yeah.
Okay. Yeah, if you could follow up offline, that'd be great. Okay. Thanks very much, guys. Appreciate it.
Thank you.
Once again, ladies and gentlemen, it is star followed by 1 on your telephone keypads to ask a question. We have the next question. Once again, ladies and gentlemen, it is star followed by the number 1 on your telephone keypads if you wish to ask a question. Please note there might be a slight pause as we collate the questions. Once again, it is star followed by 1 to ask a question. We have the next question from Thomas Jia, the personal investor. Please go ahead.
Hello， 就是我用中文是来提问了，就是我有2个问题，就是第一个问题的话是说，咱们现在会不会趁着价格是很低的时候进行私有化呢？这个是第一个问题。还有就像第二个问题，因为我用过咱们那个激光联盟的产品，咱们那个激光联盟的产品的话，就是我发现现在就是说是有非常多的下载，就是比如说淘宝啊或者是抖音，但是淘宝或者抖音的话，它实际上我的手机上它就已经有了，但它仍然是让我下载，就是根本没有实现咱们那个就像是个性化推荐的功能。就是我觉得这个应该是咱们的长处，但是咱们却没有用上啊，就这2个问题啊。OK， thank you。
对第一个问题，对我们暂时没有私有化的计划因为我们相信股价被低估了应该这个也不会趁这个机会去做私有化那这是第一个问题。第二个呢，你是使用了我们极光联盟的产品是吗？
对，就是说是我呢是对咱们极光联盟，因为我是咱们的这个投资者，大概4年了，大概3年多4年了，就是在没有任何成交量的时候，这就是我也走过来了。但是我是因为只要是就是我看到咱们跟什么公司是有合作，我就会把这产品下载下来看，比如说像是外法门的钥匙，就是或者是那个就像是健康头条，我都有下载下来。但是我能发现他们跳出的广告，它是全部是同一类的广告。它总是重复的广告，比如说我的手机上是已经装了淘宝了，但是这就跳出来。
对，那么呢，这里面的广告类型呢，它有2类就是说，首先呢，有一类广告呢，我们把它叫做重定向的广告比如说你手机上有淘宝，但是呢，你可能还会看到淘宝的广告，那这个叫重定向的广告。那么就是因为你手机上有淘宝，它才给你显示淘宝的广告，因为这样你就不用再下载淘宝了，你可以直接进到淘宝里面去购物，明白吗？所以这个是一类这个广告的这个类型那么其实一定程度上也是根据你这个一些购物的这个或者说 APP 的使用习惯跟安装习惯来推荐这个广告的。那么另外一类呢，就是另外一个问题就是说这个你提到了就是这些 APP 上呢可能有很多广告并不是说你所喜欢的，那这些 APP 上呢也不是所有的广告都是由我们提供的那么他们通常也会有多个这个广告的这个合作伙伴，比如说他们也可能会跟腾讯的广联通合作那么也可能会跟我们合作。那么跟我们合作呢，那看到那些广告，这个是我们也是在持续的在优化这个广告的这个精准度的对，所以你看到那个也未必一定是由我们提供这个是要稍微澄清一下，大概是这2个情况。好吧。
OK， 那么就是咱们现在的 DAU 是大概是多少？因为咱们 Q2 的时候大概是已经是就是咱们现在的 DAU 是比 Q2 来说大概高了多少呢
？DAU 数字。
我们刚开始的时候已经说过了，我们现在的 DAU 是180
180，咱们那个是 Q2 是就是一个180，是不是
？180 million。
就是咱们那个 Q2 是那一个Q2 就已经是，但是在今天呢，就是在这个是 Q3 呢，就是比 Q2 大。
对，现在我们不能够披露这个 Q3 的数字这个是material information， 这个现在我们是在说 Q2 的季报，我只能披露 Q2 的数字。
行，好，OK， thank you， 谢谢。
Thank you. Once again, ladies and gentlemen, it is star followed by 1 to ask a question. We have the next question. This is coming from the line of Ryan Roberts from Navis. Please go ahead.
Hi. I actually had a follow-up from the previous caller. Actually had an interesting point about kind of maybe user experience and potential ad overload. If you cooperate with a couple different platforms, if an app developer cooperates with multiple platforms, that could lead to a kind of a deterioration of experience if you're showing an ad and Tencent shows an ad and so on and so on. Is there any when you're looking at kind of the ad load and kind of overall performance, I'm just kind of curious, is there any kind of way you can monitor that from a kind of a user experience perspective? Kind of the ad developer probably that's probably more of a concern for them, but then again, if you're kind of providing some of the advertising service for them, I would wonder if you have a maybe an element of concern there, because that could impact ROI. I would think from your advertising clients, if the inventory is maybe saturated. I'm just kind of curious how you guys approach that problem.
Yeah. So actually, the beauty of this product is the user experience. Is actually not. It's never an issue for us for the time being, right? Because first of all, for the ad load, currently it's very low. It's actually per DAU per day we only show 0.5 the ads, right? So versus the typical, 黄点通 or any the media, the feeds advertisement, they are going to show like a 10 to 20, right? So this is immaterial compared to the traditional way of showing ads. And even though we increase the ad load, by 100%, which is one exposure per DAU, which is still very, very limited. And second of all, we've actually, have done a few analysis with the developer to analyze whether this new format has any impact to user behavior, such as whether we are cause increased number of users to delete the app, right? So we have done all these sorts of analysis. Actually, we were never able to find any evidence that links to users deletion of the app because of the app developer used our JG Alliance product, and in some cases actually it also improved the user retention, which is very, very, very surprising to us as well. So net basically there's no negative user experience, and we never received any user complaints as well since we launched this product.
Yeah, actually, product-wise, basically we will provide the A/B test tools for the app developers. So basically, we can do our A/B test for a group of users. They will show our advertisement, and another group they don't show any advertisement. So basically, from the data and the result, those two they have no difference of these two groups of users.
Yeah, no statistical difference. Got it. Okay. All right. 谢谢郭连成. I'm good. Thank you.
Okay.
Once again, ladies and gentlemen, it is star followed by 1 to ask a question. We have no further questions at this moment. I would like to hand the conference back to our host, Mr. Wangerson. Please take over, sir.
Thank you, Rohit. Thank you, everyone, for joining our call tonight. If you have any further questions and comments, please don't hesitate to reach out to the IR team. This concludes the call. Goodbye.
Thank you. Ladies and gentlemen, that concludes our conference call for today. Thank you all for your participation. You may disconnect now.